All right, ladies and gentlemen, I hope you had a wonderful day. Happy Bitcoin approval day, but we have a big day with the CPI tomorrow, and I hate to break it to you, but the CPI isn't going to surprise anybody. So we have a couple of things we need to talk about. I'm going to go over the main theme with the CPI, but it seems like the Fed has already showed their card. If you've listened to John Williams today and any of the other Fed speakers, none of them have brought up their worry about inflation. They've brought up interest rate cuts and when they're going to happen. They brought up quantitative tightening, but nobody is worried about tomorrow. Even all of the analysts, there is not much to deal with in the sense that they all kind of sound the same. So tomorrow may just be an excuse to bring volume in. However, if we do get a surprise, that means a lot of people are not positioned for any of it. So I got the breakdown for you. I have a couple of plays that we're going to follow it up with. And then what I need from you, a thumbs up on the video. Make sure you're subscribed, all that good stuff. But I need you to remember, we will be live tomorrow. YouTube.com/the stock market. It doesn't say the stock market, but you could do that and then just put live and it will send you to the live channel. We will be streaming everything tomorrow morning in the morning, 1 hour before the bell. I will go live about 10 minutes before. I'll have a couple of analyst comments as well, and then we will be interpreting every single part of the CPI tomorrow live. So hopefully we see you there. We even got some crypto stuff to talk about, but it should be a wild one. And now, run it, baby.
Working to the couch, it's a 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
Well, right off the bat, tomorrow's CPI, 1 hour before the bell. This will be our second big set of data this year. The first one we had was last week with the non-farm payrolls, and you guys saw what happened. There was a lot that we had to deal with, but like I already told you, sadly, nobody is expecting much. The consensus right now is very tight. And what I mean by that is that most analysts and economists are pretty much expecting the same thing. If you compare that to the non-farms, that one had a wider range of about like 130,000. Even on the prior non-farms, even the prior CPIs, there was a much wider range in terms of what people were expecting. But this time around, you could go read the comments from the biggest banks out there. They borderline all sound the same. On top of that, you have the option market only pricing in a 0.7% move. If you watch that tutorial we came out with the other day about pricing in options and using the option chain, well, guess what? You can use that for this event. If you go to tomorrow's option chain, you could go down, calculate the at-the-money options. Even if you go right here to where the Thinkorswim shows the plus or minus, it's about $3.30. This is about 0.7%. Even if you go 2 standard deviations out, about $7 either way, all of those options are fairly cheap. That's why I'm telling you, if there is a surprise tomorrow and something does happen that nobody was expecting, we could get a very big move. But for now, everybody is in consensus that the trend is going to stay the same. Remember, this is the December inflation report, and they're not expecting anything change too much. So getting into the data and what to look for tomorrow, core is the one that we want to be watching, but ironically enough, this is the one that people are expecting to come down. The good news about this is that people think core will drop below 4% for the first time in a while. I think it'll be the slowest inflation since like 2021 or something like that, but the other key you got to watch out for, it will be the month over month. Even if it did come in a little bit higher, and if it doesn't come in a lot higher, people aren't going to be spooked by a year-over-year number going too crazy. But a lot of people on the latest reports, they've been focusing on that month over month. In this case, it's supposed to be about 0.2. There's a lot of people at 0.3, and there's nothing really surprising if you see a 0.2 or 0.3 print. If we get 0.5%, anything higher than that, or even a bigger decline, that's where we're really going to get surprises on. Higher will be bad, and I was saying this all day today. There's nothing confusing about the inflation report, because if you get a low CPI, there's no such thing as too low. If this thing plummets, people aren't going to take that negatively as if this was the job market. So that's why I'm saying, if anything, it will be a really good sign if this thing drops. But now another good sign will be if real estate comes down. The irony is that even though we're expecting core to come down, headlines expected to be a little bit more stable, the thing is, people are not expecting real estate to come down that much. So if we do get any positive surprise, it will happen in the form of real estate. Remember that super core, people are saying that will come down middle of the year, just like they said last year, and it never happened. But at the end of the day, this will be where a lot of people will get their surprise, especially if it looks like nothing's happening and you get a bigger drop on this. I am sure a lot of people are going to jump on the bullish train if you watch that real estate inflation come down faster than expected. But the next step now is going to be headline, and this is where it gets a little more interesting, because headline is expected to stay the same or come in slightly higher than where it was last time. And I don't know if you've seen the chart, but for the last 6 months or so, it's kind of played this game around 3.1. It hasn't gone below 3. Even some of the Fed speakers today were saying, yes, inflation will return to 2%, but in this time around, people are expecting this to be a little bit more stable. And like I'm telling you, a higher print on headline, that shouldn't scare anybody too much. Now, granted, if it's a big one, that'll be bad, but at the beginning of this week, you had a lot higher expectations for headline. It's kind of moderated, but the way people are looking at it, autos and then stable gas prices are the reason why they're expecting to stay there. Maybe you'll get some of the other shipping effects from the war stuff, but that didn't really happen towards the end of the month. But in general, as long as this thing's stable, even a little bit more margin of error to the upside, this shouldn't shock everybody. And that's why I'm telling you, core is probably going to be the main thing, but it's not going to really give us much regardless, and that's what brings us into the final key. As always, the only thing you got to be watching out for tomorrow is a surprise. If we do not get a surprise, we're probably going to melt up very gently until the earnings, and then let the earnings bring in anything good from there or anything bad from there. But if we do get a surprise, like I'm telling you, make sure that it's big enough to scare off the crackheads, because like we saw on the non-farm payrolls on Friday, there was a lot of surprising factors, and that came in, it wasn't that good, but by the opening in the middle of the day, you started going up because people were finding little things about it that they wanted to buy, and then eventually everyone said it is status quo, and that's to give you my expectation. I really think everything should fall in line. You may get some variance here and there, but for the most part, the status quo, this idea, this picture being painted by the Fed that inflation's going to be coming down and allow them to work, I think you are going to have that upheld. And like I told you at the beginning, a lot of the Fed members have showed their cards when it comes down to this. Nobody has really said anything negative. If anything, they have all talked about inflation coming down. Yeah, there's a worry if it comes up, but most of them are pretty confident that things will stay down. And if anything, the most positive surprise that John Williams said this year, or that he said about last year, was that inflation came down faster than expected. So we'll see how it plays out. It is going to be a big data event. We waited for it, and like I told you in the beginning of the video, I think it'll be a good excuse to bring volume in, but I don't know if it's going to change the story too much. And well, that means they're going to have a lot of patience, and I hope you're ready. But now, let us get into the plays. So, right off the bat, I got a couple of different plays I want to go over. I did make a bond play today that I will be holding most likely into the CPI because the 10-year auction did not move it that much. But the first play I want to start with is one that I made this week. I went with this smaller gold play. It went up, and then today it came back to break even. But I think this is going to be a very interesting one for tomorrow because it should react positively with everything else going on with the CPI. If that comes in negative, or if it comes in low, we're at status quo. But I do think you need the dollar to drop. That's going to be the interesting part about the CPI tomorrow. If it doesn't allow the dollar to catch up or go down after being up this year and the markets are ripping, that may complicate a couple of things. But now the thing about gold, my worry is that it doesn't move with inflation data. Although it would like inflation going down, the only reason of that would be because of the rate cuts, and I think it will more so follow policy moves, the Fed, and Fed comments. So it's going to be an interesting one tomorrow because now it's getting back to that price. Remember, I told you around 2020, even below would be a better price to get in on. That is a price I'm going to be eyeing. I'm not going to play it before the event, but depending on the move that we get or even intraday, this one may either stand out as a play that not a lot of people are focusing on while they're trying to trade the indexes and all of that, but we need the dollar to play along. Otherwise, it may actually be a dud. But that is play number one. I'm going to be watching out for that. Then play number two. This one we brought up the other day, and I'm really starting to like it because they had news today. It was in relation to the JP Morgan conference. They were talking about guidance in Humera, but ABBV. You have 1 day left to play that dividend arbitrage. Their ex-dividend is at the end of the week, so pretty much there will be buyers leading in just for the dividend for tomorrow, but you may be out of that window to play the arbitrage. If you're not familiar with the arbitrage, we talked about this a little. It's essentially you find a stock that pays the dividend, pays the dividend, and then depending on what the dividend is, if you could get it at the right price, if the dividend gives you more than what the put would cost to protect yourself, you could essentially play ex-dividend for free, get both ways, get your dividend, have the dividend pay for the puts, and be able to finesse it a little bit more during this event. But in this case, the options went up, these 162s. This was the one we were looking at earlier, but the stock's up now another $2.50. That's why these ones are dead. If you wanted a position right now, it wouldn't really work out at the 165s, but the thing that I like about ABBV right now is that they had good guidance. They had really good long-term guidance. They didn't give it out fully, but the thing is, on a momentum scale, anytime they've gone through this like 165, 168 level, they've either topped out and sold off immediately, or they started to break out pretty rapidly. And last time they got through another previous high, it started to go crazy and started a multi-month run. This is something I'm going to look out for. Not for the long term. We're already in that. It's our biggest position, but there could be some flip opportunities. However, be careful because ABBV, when it does go crazy, those options get juiced, but when it does slow down and have those red days, they can easily get crushed. But that is play number two. Going to be watching out for that. And then finally, play number three. You think I'm going to ignore that Bitcoin approval? No. I want to see if tomorrow is going to be a sell the news event. Right now, Bitcoin futures are doing very well, but I think Ethereum and Ethereum futures, they might be the winner out of all of this. It has been underperforming over the last couple of weeks and days, and now all of a sudden, since that fake little rumor on the SEC thing yesterday, Bitcoin dropped, and then it had to work its way back up, and now it's getting back up after it got the approval, but all the while, Ethereum kept running, and it has now made up for any of that underperformance, and now they're starting to match up here, and a lot of people are bringing this up because now they're saying Ethereum's next, so I think this could be a good place to look out for. I forgot the ticker for the mini futures. I don't know how many Ethereum plays there are out there in terms of stocks, but I will definitely be keeping my eyes out for this, but those are the main plays. As far as everything else, like I told you, I did make a bond play earlier today. I grabbed the 30-year in relation to the 10-year bond auction, but absolutely nothing happened by any of that. It dropped a little bit lower, and I do think there will be a positive result if the CPI does come down, but bonds are at an interesting sweet spot. They may want to dance around, or if the crackheads do come back up and they really want to start bidding on those Fed expectations and everything else, this thing has a lot of upside, but it still has a lot of downside. So if anything, stability will probably be the best one, because if there is an outsized reaction, it's either going to be a huge gain, or you could get a bigger flush and getting you back down to where you were at Fed levels. But then again, Fed, SPY, IWM, everything, it's all hovering right above the day when we had the Fed. So that's everything else. Gonna be watching for the data. I think reaction will be the best than predicting. Thankfully, the market's closed, so you can't get too crazy. We'll find out in the morning, but now that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, if you're struggling, at least you're not capitulating, baby. Oh, I don't know if you feel me, man, but Chad, drink that water. Stay hydrated, healthy. I will see you in the morning. Get some good rest. And it's game time, baby. Horna.